Okay. Now let's try to understand the transaction price changes impact on revenue recognition principles. So effectively, let's take the example of Microsoft company wherein they are selling some subscription which include office apps just like Word, Excel, PowerPoint, and the standalone selling price is $120. Similarly, the cloud storage is there and standalone price is $80. So overall, this standalone price in totality is $200. A customer goes to them and he signs a contract for $180, meaning getting a discount of $20. Now, what will happen at the initial allocation? It will be simply allocated in the ratio of standalone selling price, meaning 120 divided by 200, which is 120 divided by total of them 200. 60% would allocated on the office app and 40% would allocate on the cloud storage, just like this. 60% on office app and 40% on cloud what can say storage. Now there is a later changes and we are studying about the transaction price changes, right? Microsoft gives an additional discounts and says this is generally discount available to all our old customers as well. So after that the contract price reduces to $150 from which from $180. Now there is a change in the transaction price itself. Then what you will be simply doing, you will be simply saying that now this $150 will be allocated again in the 60% and 40% ratio. So the methodology remains the same, the allocation would remain in percentage terms same, only the thought will be like the new transactions price will be allocated among the products. So even if Office 365 standalone price increased in the market, allocation is not changed. Now remember that there may be cases, this line may not be helpful much for you right now, but if you understand that there may be cases like these standalone prices may change in the market. This may become from 120 to 140. This may become from 80 to, let's suppose, $100. Even if these changes, these become 240, then you won't do the reallocation. So if there is a change in standalone selling price, then you won't reallocate. But if there is a change in what you can say transaction price, meaning overall value of the contract, then you will be reallocating always. And that's the line which is written here, that if the standalone price increased in the market to 140, then allocation won't change, new allocation won't be done based upon updated standalone price. So once the allocation is done, that is done till the time transaction price changes. Now let's see the textbook concept for this again. So it says that if the total transaction or total contract price changes after the deal is signed, just like Microsoft case from $180 to $150, the new price should be split into the products and services in the same way as when the contract was first made. So the FSP ratio of initial contract should be used. Now, even if the market price of each product and service changes later, even though FSP keep on changing, the allocation should not be changed, meaning the original ratio of 60% and 40% what we saw in this example should be continued. In other words, the original method of dividing the price stays the same throughout the contract. So the FSP proportion will remain same. I hope you understood this.